Bitcoin has finally broken its 60K support and is starting to head into a high level of liquidity that we have been showing you on this channel for quite some time now. What I'm going to do today is take a bit of a deep dive into the higher time frame because I want to show you where we are macro wise. I think a lot of people are starting to wonder if we're even going to have a continued bull market, which I just think is completely crazy thought. But, you know, we have to be prepared for all options. And I'm going to show you why the high time frames show me that it is not all over for cryptocurrency. And in fact, we are just getting started. So that's what I'm going to get into today. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the subscribe button if you're not already subscribed. And I just want to give a really big apology to all of my regular subscribers on this channel. I know that I have been MIA for about a week now. Just to be totally transparent, I have a condition. It is one of those things that just hits me really bad every now and then, and I don't know when it's coming on. It just gets me, and when it gets me, it completely knocks me out. And this one was one of the worst experiences I've had in probably ever with this. So that is my reason for being missing in action. It is also my reason why I want to build other traders on this channel so that they can come here and they can support you when I personally cannot be here. But besides that, whilst we're in the process of doing that, just don't forget that you can always use any of the links in the description down below to join any of the exchanges that give you access to our Discord. And inside of our Discord, I have 8 traders. And we do daily updates for the free members. We do much, much more than that for our paid members. In addition to having our free Discord, we have also a private community where you get access to all of our courses, not just trading, but trading and investing if you want that. And private community, multiple live sessions a day, Q&A hangouts. You know, I've got a big team in there that help all the time. I've built this team to support me through my personal conditions. So they're in there and they're willing to help you. So you don't need to go through this cycle alone. If you get value from this channel, consider coming to join us and learn from more of my team. But even that aside, you know, the links down below for the exchanges not only get you massive trading fee discounts, but, you know, they also get you access to at least the free side of our Discord. And when I can't do things on social media, I at least try to write an update. And if I can't, my team is there to rely on. So let's get into, now that that dramatic story is out of the way, let's get into this macro chart that I want to show you for Bitcoin. Now, I want to focus on this particular area here. If you've been watching this channel for a while, you should understand where we are in the macro cycle. And that is because I have been banging on about this pattern really since, you know, 15,600, and essentially showing you the 3 rises and 3 drops on the daily time frame that equal weekly time frame levels as well. So this here was our W formation into 3 rises that completed on the daily time frame, but formed only 1 level on the weekly. Then we go into the sideways drops and we started again with another W formation, and that led into a further 3 rises, had our pullback here. This time it was a V bottom, led into our further 3 rises. So I'm going to zoom out on this last bit because this is the most appropriate bit. This here would have equaled the weekly time frame rise level 3, and so it essentially completes the formation. And now we're trying to decide, whilst we understand that there should be a 3-level drop, a 3-level drop doesn't necessarily mean a drop to lower prices. It can be an accumulation zone, and you have to match that up to what is going on, you know, in the macro cycle. Where are we? What should be happening at this point in the cycle? And at this point in the cycle, we've only had the halving, 10, 12 days ago, I think it was. So we're in the accumulation phase of the halving. And that phase can last usually, somewhere between 90 to 120 days before we get a breakout, and then we wait for a retest. So here's where we are right now. The range started here on the 28th of Feb, and we're kind of looking for an approximate worst case end at around June 27-ish. Don't take those dates as like gospel. It's ish. It can break out anytime. We really just want to trade what we see. But within this range, we'd previously identified on this channel that this here is a half Batman formation where we had the initial peak and we've never revisited that peak since. We did have this 1 wick to it. And so we were kind of assuming that, and we're still assuming at this point in time, to be honest with you, but because we've got, a long time to go in this accumulation period, so anything can happen. But at this point in time, we're kind of assuming that the accumulation range top is in at around the 73 kind of 100 area. We're assuming that the range top is in, and we were waiting for the range bottom to be in. And the reason why I didn't think the range bottom was in, and I've spoken about this on prior videos before we actually ended up breaking down, the reason why I didn't think it was in is because I could see the market maker trapping positions to the downside, whereas I didn't see that to the upside. So what I mean by that is where I see the range top, we've got these candle closes here and we don't have stop hunts to the upside, whereas to the downside, you can see that we had this wick down here, then we had more wicks down here, and we just continued to have wicks testing the bottom of the range until we eventually broke today. So that was my reason for believing that the downside of the range for this period of the cycle was not yet in. And we had talked about this liquidity zone right here. I'm going to show you exactly where I got that from in a second. And we also talked about worst case scenario, this daily vector candle here, which is from Monday, the 26th of February. And I like that candle as a hopeful range bottom, absolute worst case range bottom, because at this point in time, it also lines up with the 200 EMA. That doesn't mean I think we're going to go down there. It really depends on what liquidity is available. But this is kind of where I want to see if we do continue to have downside. This is where I want to see it hold. If Bitcoin broke the daily 200 EMA, I'd be a little bit worried. But if it spiked into it, held it, maybe created some sort of market structure change, like a W formation or something around it, that would be extremely bullish for me. And that is where I would say, okay, the confirmed range bottom now is in. So right now, we don't really have the range bottom, in my opinion. That is what we are waiting for. So let me show you this liquidity zone. I'm going to use the TTC heat map liquidation, and I'm going to go over a 3-month period. And I'm choosing that period because of how long we've been in this accumulation. So when I add that to this chart, now we can see all this major kind of yellow liquidity here. Now, prior to today, this big yellow zone was all the way up here at the 60K area. This current candle obviously has wiped that liquidity out. And so this is what happens when there are really high level yellow zones. Market maker is going to come for them eventually. And he has started, maybe she has, whoever, let's not do that. But anyway, they've started coming for it today, essentially. So the question really is, how much more of it do they want? And just because there's liquidity below, like, look, there's even a yellow zone down here at around 42 or 41.5. That doesn't mean they have to come for it. I'm not banking on prices all the way down here. I'm not even banking on prices down to the bottom of the zone. To me, that's only one confirmation. So I like to marry it up with multiple things. And this is why I'm eyeing off this one right here as my worst case scenario, because what are my multiple things? I've got a daily vector candle, I've got a 200 EMA, and I've got a high level of liquidity. And I also, prior to today, I have to recheck these, but I had heat map long orders waiting in this range to long Bitcoin as well. So many factors add up to my reasoning that I'm okay for Bitcoin to break down. I'm waiting to see if it breaks down into this area and then how it reacts from there. And I'm not too worried about it breaking down whilst it does that, because I believe we're just in the accumulation phase around the halving that kind of always happens. So now that we know that that liquidity is taken out, we can probably extend this box now down to the bottom of this yellow area. And it does take us down to say around about the $49,000 region, worst case scenario. But again, if it were to break down that low, that means it would break down below this vector. And then the next vector that we would be eyeing off would be this blue one here, which sort of, it doesn't make a lot of sense to me. And the reason that it doesn't make sense to me is because, you know, this was the vector after a period of consolidation. So it was a high amount of volume that had to come in to break price out of this consolidation. But this was within a trend, and it was actually a slowing down of volume because it's blue, it's not green. I'm aware of it. I'm marking it. I don't at this point in time think we're going there. But if price shows me we're going there, then we will talk about it then. If price does keep breaking down from here, what is worst case for me? When I look at this, this is a formation here, half Batman. This here would be counted as a level 1 drop because this 50 EMA was broken with a vector candle. That's what confirms a level 1 drop. So according to this pattern at this point in time, level 1 is in on the daily time frame. Then we had a retracement here to about 50% of the range at the time, and we created a lower high and we've broken down again. So that would tell me now that what's happening right now is the level 2 drop. Now, does that mean it's over? Not yet, like until we start to go into consolidation or we have a retracement or something like that. That's where we know the bottom of level 2 is in, but we are currently in a level 2 drop. What could happen next, and what I would kind of really be quite excited about, to be honest with you, would be if we held this range now and we came back up to test the 50 EMA, which is right here, the blue one. Then we came down for that lower level liquidity and we took that liquidity at around the 200 EMA. That would complete a 3-level drop on the daily time frame. And if we started to get a market structure change on a lower time frame from there, bullish as all hell, right? Like bullish as all hell if all of that were to happen. So I don't see this as too dramatic. I don't see it as a massive, massive problem, but I think it's an amazing, amazing opportunity to get ready to buy if you get the confirmations, if Bitcoin does eventually come down into this zone. Now, the other thing too is because we are in a macro bull market, we may not get the third drop. One thing we have to consider right now is the timing. And right now we are on the day of the FOMC. Again, if I bring up the BTC plugin and look at the Forex calendar, this is all obviously in my time zone, but tonight we have the FOMC statement, press conference. Like it's a very big news week. Yesterday we had news, tomorrow we have news, Friday Asia has a bank holiday and a bit more news. Like this is a hard week to trade. FOMC week is always a difficult week to trade, and it's likely that price is coming down in anticipation of what is going to be said during that statement. So that does mean that you have to be very, very cautious, but it also means once it's done, it's done. Like once the news is over, don't forget we have a half-hour press conference. So don't react immediately after the statement, especially with FOMC. You got to wait at least an hour or two after the whole thing is over before you make any moves with your trade. But we should be fairly clear with trading from there. So that's where, as a day trader, you could then drop to lower timeframes to see if there's a short-term opportunity. And there could be, on a very low time frame, a short-term long position here as price does retrace to the 50 EMA. But just always remember, if you're going to trade against the macro trend, which is what you would be doing because the macro trend currently is down. Currently, that doesn't mean we're in a bear market. It's just currently down. If you're going to trade against that, you need to always be aware of what is going on the higher time frame. So you would take a very short-term long position should we bounce after the FOMC. I don't know if that's going to happen. I can't tell you if that's a good idea right now. We have to wait and see. But if you get the right confirmations on your lower timeframes, that's a possibility, but be aware of this daily timeframe 50 EMA and be prepared to take profit there, because not only is that a typical rejection area, but it would also be around the top of this daily red vector. So it could be that any long positions on smaller timeframes end up only being a recovery of this daily vector. Okay, now if you do want to take these trades, I'm actually going to show you how you can connect your TradingView account to OKX so that you can trade directly on TradingView. It's pretty epic. It means that you can do all of your charting in TradingView and you don't have to go to the platform to enter things separately. So the way that you do that is, let me just move this out the way so that you can see it clearly. You're going to come down here and you're going to click on this little open panel thing here. And then here, click on trading panel if it's not already open for you. And then scroll down and click here on OKX. If you don't have OKX showing there, just go here to see all brokers and you will find it. But once you click on that, it's going to come up with this telling you to connect your TradingView to your exchange. And you just click here on connect. Now, if you don't have an OKX account to do this, you can open one. But be sure to use the link in the description of the video to create your OKX account first, because that's the one that's going to get you access to our Discord. If you do it directly from here, you won't get access to our Discord. So connect here. And if you're logged into OKX already, it's going to take you here, and I've blanked it out, but here it will have your email and it will make sure that you're connecting to the right account. If you're not logged in, it will ask you to log in first, and then you will see this page. Click on authorize, and here you'll see your history of trades and whatnot. If you click on these other tabs, you've got your spot account here, and then you can change that to your derivatives account as well. When you want to trade, you just click on this trade button. But before you do click on the trade button, just make sure you're in the right account here. So if you're wanting to place a spot trade, make sure you're in the spot account when you do it. And if you want to place a futures trade, you will be in the derivatives account before you click on this trade button. But then also make sure you have the right chart open for the trade that you want to take. So I'm going to keep this on derivatives account and click on trade. So I'm going to set up my trade first. This is going to be my trade example. Let's just say I want to buy Phantom somewhere around the daily 200 EMA. This is my trade setup, and all I need to do is copy these numbers, my entry, stop loss, and take profit over here onto this side right here. So I'm going to do a limit order. You can also do market, but I'm going to do a limit order and put in those details. And then I can choose the margin mode, isolated or cross. I'm one of those traders that believes you should never use cross leverage. So I'm going to stay on isolated. And because my stop loss is 8%, I'm going to keep my leverage level on a low leverage because I don't want to get liquidated. So I'm going to keep this on a 3x, and then it's just a matter of me deciding how much Phantom I want to buy. So let me just put that in at 100. And all I need to do from here is click on buy. And you can see here that my entire order is now placed. I have my limit order with my stop loss and my take profit. And if price comes down to hit my order, it is going to automatically place this within my OKX exchange. Everything is done. I don't need to go to a second place. Now I'm going to show you something very quickly on Ethereum, but before I do, I just want to let you know that tomorrow I am going to be taking a deep dive into alt season, whether or not it's due yet, what to prepare for, how to know what to do. I'm going to be doing a really big deep dive with TradingView and OKX tomorrow over on the TradingView YouTube channel. So I will link that down below. Be sure to check that out, because on this channel, I like to give you the short, sharp updates so that you can get the information in a short space of time. But over there on that channel, I'm going to be spending an hour with you where we can really go in deep and have a look at where we are in the current cycle and what that means for our altcoins. Because I know a lot of people are waiting for alt season and there's a lot of worry that it's not coming. The altcoins just seem to keep bleeding. I'm going to show you why this is the most perfect time to get ready to accumulate those altcoins. So be sure to join me on that video tomorrow. Link is in the description down below. Now, let me just quickly show you something about ETH. It's a little bit of a teaser to what we're going to be talking about tomorrow. Looking at the USDT chart on the daily time frame, it is essentially in a bull flag. Even though it's coming down, it looks a little bit scary. It's essentially in a bull flag, and we are heading to around about the daily 200 EMA. There were some very significant long orders sitting in the books between 25 to 2,800. Really quite a lot of them. A lot of people ready to buy Bitcoin at its lows. And that also lines up with this daily vector candle right here. For me personally, I would like to see Ethereum hold the daily 200 EMA, but I also understand the way the dominance is working and everything like that. If Bitcoin comes down to its daily 200 EMA, then it's likely that the alts will drop a little bit further than their daily 200 EMAs. So as long as we hold this area of interest, worst case scenario, I'm okay with Ethereum. If it does come down to around 2,500, I still think that that could complete this daily time frame bull flag. And as long as we change the structure out of there, we should be fine. When I show you those heat maps, this is what I'm talking about. Look at this massive, massive cluster of red orders here. If it's all over, that doesn't happen. This is people really waiting for low prices here between 28 to 2,500. People are happy to accumulate Ethereum in this zone, ready for the next breakout. So just be ready for that yourself, you know. But when we look at ETH BTC, it is still putting in lower lows. And this is what I'm going to deep dive into on tomorrow's show on TradingView. So be sure to jump on the TradingView YouTube channel. I'll see you guys there tomorrow.